If you are an LLC owner, it is not just about how much money you make. It is about how much money you keep in your pocket. It's about profit. It is about making sure that you have a tax strategy. That is what is required. Many of you may think these wealthy people are just on a whim at the end of the year writing off certain things on their taxes, but they are not. They are being very intentional, they're being very strategic, and they are making sure that they are following their tax plan to stay profitable. That is why I'm going to give you my 5 tax write-offs for LLC owners, and you're going to want to write this down. But before we jump in, I'm going to need you to like, comment, and subscribe. Now, let's get after it. When starting a business, you incur various costs. These costs you incur from the very beginning are called organizational costs or startup costs. Organizational costs are costs like you pay the attorney to set up your LLC, or you pay to get your LLC agreement put together. Those are your organizational costs. You can write up to $5,000 off per year in organizational costs when you're first starting your business. But in addition to that, you will have startup costs. Startup costs are all the costs you incur to get started in your business. The purchase of the laptop, the purchase of the cell phone, just getting yourself together, your branding, your marketing, your startup costs from the very beginning. And you can write off another $5,000 in startup costs. So $5,000 in organizational costs, $5,000 in startup costs. And any costs above and beyond that $10,000, you get to amortize right off over 15 years. But here's the thing I want you to know, and make sure you write this down. If you incurred costs prior to starting your business, maybe you incurred costs last year, the prior tax year, and you did not have your business going, guess what, my friends? That cost can be aggregated in with your startup costs. Do not fail to go back and remember all the testing you were doing when you were first playing with the business, when you thought you knew what you wanted to do, but you weren't really sure. Gather all of that cost, add it together, and write it off as your startup and organizational costs. The home office deduction is an office deduction that you should be taking, and there's 3 ways that you can write off the home office deduction. You can do the standard home office deduction, you can do the simplified method, or you can lease your home to your business. And the standard home office deduction method, that is where you are taking the square footage of your home office in ratio to the total square footage of your entire home. So if you are using a home office of 200 square feet and your home is 1,000 square feet, that's 20% of all the costs to run your home is written off as your home office deduction. 20% of your rent, 20% of your utility, 20% of your insurance. That becomes your home office deduction when you're taking a standard method. The simplified method allows you just to take a $2,500 write-off against your income, no matter what your costs are. It's just simplified. You're not having to track anything. You're just going to take $2,500. Both of those methods require you to have profit, because if you don't have net profit in your business, your home office deduction is suspended. The third method does not require profit. The third method requires you to do a little bit more, but in my opinion, it's the better method. It is where you, the owner of the home, you, the person that's renting the apartment or house, you execute a lease between you and your business. You decide, I am going to lease a portion of my space to my business. And I decided, based on comparable comps, that it is going to cost my business $300 a month to lease space from me. Every single month, your business will pay you $300. And you probably are thinking, what about the $300, Karla? That's additional income. It is. But here's the thing you need to know. $300 per month will be deducted on your income taxes on your business. That's $3,600. On your personal income tax return, you will report that income. However, you will report an equal amount in expenses, because you will have utilities that you had to pay. You will have internet you had to pay. You will have rent that you had to pay that you're not writing off anywhere else. So you're going to allocate the cost to that rental income, and you're going to be in a better tax position because you don't need to be profitable if you lease your home office to your business. Vehicle deductions are oftentimes overlooked, especially when you have a side hustle and a full-time job. Now, I want to make sure you're clear. If you have a full-time job, you still are using that vehicle for your personal business. Even if you are a contract worker going to someone's home or someone's office or someone's business, you want to make sure that you are getting your vehicle write-off expenses. And you're going to do that one or two ways. You're either going to take the standard mileage deduction and track your miles so that you can allocate the standard mileage deduction times the business miles, or you're going to take actual expenses, the costs you incur to operate your business, which includes the interest you pay on your car loan, your insurance, your gas, your car washes, your repair bills, whatever it is you do to keep your car running. So you can do either one of those things. But the key is make sure you get your vehicle expenses, and do not let anybody say, oh, you work in your home, therefore you can't take your vehicle expenses. You can, because your home can be your administrative office. Make sure you write that down. If I have to report out to someone's office every day, but my business location is my home and this is my administrative office, you want to make sure you're getting your tax write-off for having to leave your administrative office. Investing in marketing and advertising is one of the biggest expenses that you should have for your business. If you are trying to grow a business as an LLC owner, there's no way you can be in business and not have marketing and advertising costs. If you're doing anything online, if you're using your phone for that, if you're paying people to help you, make sure you track all your marketing and advertising costs and get those written off. And that is one of the areas that is pretty elusive. You decide what your marketing and advertising costs are. No one else makes that decision for you. And how you choose to market your business may be different than how someone else chooses to market their business. Remember, Code Section 162A, write that down, says that you can take all the ordinary and necessary expenses associated with driving your business. And IRS should never step into the mind of the entrepreneur and try to outthink them in terms of what's required to operate their business and their brand. Depreciation is a great tax write-off. This is one of the best tax write-offs in the tax code. Code Section 167, write that down, because depreciation allows you to write off all of your equipment that you purchased, all of your cameras, all of your tripods, all of your lighting, even your vehicle if it's over 6,000 pounds, your printers, your computers. Make sure you are depreciating those items. And also remember, if you had items such as a desk, a chair, a table that you had prior to starting your business, you can place those items in service. Write that term down and start to depreciate them. Now you know the top 5 write-offs as an LLC owner. The top 5 write-offs for an LLC are startup and organizational costs, home office costs, vehicle costs, marketing and advertising costs, and depreciation. And now that you know better, you absolutely have to do better. Make sure you track all of your costs and make sure you like, comment, and subscribe so you don't miss out on any wealth building information.